trying to fix this a little bit. Okay. It's a little bit more zoomed in than I thought it would be. um, but I'm looking to try to make this one a more concise. Oh, I forgot to post it. Darn. All right, I'll just post it after. Um, for the IG, but dang, that sucks. I forgot to post it. Um, but I'm gonna talk through three main things that that I want to try to break through today. I'm going to try and talk through three main things. So tonight's agenda is going to be investing versus trading psychology, and then I'm going to talk a little bit about reviewing some stocks that I like for the next few months. And I want to talk through some analysis from firms as well, some research points that have come through as of late, and things that look interesting to me. So I guess we could probably just start. Ultimately, you could rewatch this live stream like it's a video. And I want to try to see what's going on. So basically, to my understanding right now, what's going on in markets. Also, let me know if you can hear me. If you can hear me, that's great. No problem. Seeing thumbs ups. That's awesome. That's awesome. Awesome. So first things first, what I really want to try to do is differentiate a few things with the trading versus investing psychology. Because there's really two main factors that help me try to break up the two worlds. And one being time, right? When you're trading and you're trading things like options, you can make 100% overnight. You can trade equities and you can make 30% in a month or so, right? A name could do really well over a month. What I think is very important is that when you have the lens of, before expressing any trade or any idea, you need to discern, is this something that will grow through the life cycle of equities, or of the economy? Are we currently at the part of the economy growth where things are cyclical, meaning names that are required for growth are growing, right? There's certain parts of the equity life cycle, right? So there's the base layer of the economic or equity life cycle that certain names tend to do very well in the beginning of the life cycle, right? So names such as industrial names, and even in the case of like builder names that are inputs into what could end up being the output of what is interesting, of what is providing growth, of what is the future. right? Because a lot of times the companies that are then at the end point of providing the future have to purchase all the raw materials and energy points and all the bits and pieces from these industrial companies and have power and have manufacturing setups and have all these other bits and pieces to then be able to even build what is said the future, right? And we could talk about that. You can talk about that in several cycles, right? You want to talk about Rockefeller in 1930, where oil became, the major thing. What was super important in that period was having capital on hand, because it was a very capital intensive business, having individuals to be able to do, having the land to be able to go out and go source the oil, having the proper team to survey oil fields that would actually create oil, right? Like all those bits and pieces were what was important for what became Standard Oil. The end point of providing oil to homes and new car owners and all the other endpoints that were used for oil in the first place, right? And because of that, the commodities had a big boom at the more like the beginning of that cycle, right? And then if I bring it even closer to today, or closer to what we've experienced in 2000 or 1998, right? Cisco peaked, where currently, actually today, just this past week, Cisco is finally back at its pre-2000 bubble price, right? So we finally come back after 25 years, 26 years of hitting that high. But when they laid down all that copper and laid down all those wirings points, right? They spent a ton of money on the actual commodity itself to be able to lay all that out. They built all this, and then nobody needed it because people didn't really even believe in the internet fully. And that's what happens in that point of life cycle, right? And then you see it goes through to the point from one piece, you spend a bunch of money on that building piece, you spend a bunch of money on the other piece, and you try to move it through, and then you see what is the gains of society of having oil, right? In 1913, people can drive now. No more real need for horse and buggy. People can build online platforms now. In the example of the 2000s, you can build online platforms now to host things like YouTube, to host your website, to sell lint rollers, right? To do all the things that have happened over the past 26 years, 20 change years on the internet that we've seen, which is crazy. Live streaming. Seeing people like Kai Cenat and Twitch and all those other bits and pieces. Amazon. Imagine there is no Amazon without the internet. There's a whole new economy that was created because of what occurred in that life cycle. So when you talk about investments, I try to think of what stage of the economic life cycle do I want to invest in? Am I investing in the beginner stages because we are at the beginning stages of this new life cycle or this new economic growth cycle? Or am I going to invest in maybe the tail end of the cycle itself? Right? Like where am I actually like trying to grow, to invest in, because and then I'll go ahead and apply that to right now, right? So we know that there are a few things that are very, very important to the economy right now. And the number one thing right now that's important to the economy is AI. AI has clearly blown every other possible proposition of what's important out the water. Agreed? Agreed. So other things that are also doing great, right? Like think of the digitization of money. things such as stable coins, things such as crypto and what that's bringing. They're having kind of a moment, but really their moment was more so 2021, 2022. Right? They're at a different stage in that life cycle of economic growth. So the initial stage, I believe, where the world really got serious in crypto and really pay attention to it was during the hyperinflation period. 2020, what we saw in COVID or coming out of COVID more so, really. So think late 20 or mid to late 2021 into 2022 was really the main, wow, this maybe has a use case. And investing in that period and into things such as, stablecoin technologies, blockchain, building on chain, crypto as a whole. If you weren't already a part of it when it was in more its nascent era, think like post 20,000 on Bitcoin, or pre 20,000 Bitcoin, those types of things again are very different. So now we're coming into a new cycle in crypto. We're coming into a new cycle in drugs as well, right? With what I believe was initiated by really COVID and the ability to create this mRNA kind of, I hope my video doesn't get doxed or whatever. I'm not a pharmacist. I don't know anything about drugs, honestly. I'm just talking about economics and the narratives of it. So please don't ban my video or whatever. But COVID, the drugs. Oh, cool. mRNA, this new development. We're able to put it together. Boom, push it out. Bam. Okay. We saved some lives there. Then we start to continue to develop. Things such as GLP-1s have come out. Now it's been about 2 years, maybe a little bit more. GLP-1s have come into the scene and they've become the number one thing. Now there's another question about peptides, right? And how they're helping people with diabetes and a bit overweight and maybe even performance, if you know what I mean. And then we've also heard a little bit of some hallucinogen type drug scenario that could be a thing as well, right? And then but that's another cycle that may not even be, the main story. It could be a side story to what it is, because it is happening simultaneously as this AI thing comes around. But the leading narrative, the one that's funneling everything all together, is AI, and that is driving economic growth. That is what's currently being shown in top line GDP numbers. So there's cycles within a cycle, right? So there's this healthcare cycle that we're talking about right now with GLPs and other bits and pieces. We're also talking about crypto and what's happening there, and blockchain technology and what's developing over there with Circle, USDT, all of the pieces, right? There's a cycle as well with rates at the moment, where they're currently left just this past week, I believe, the Federal Reserve left rates at 3.5 to 3.75%, I believe. Don't quote me on that. I may be wrong, but it's close to that. And right, and these are all moments these are all things that all tie into the greater cycle of things. And what changes these levers and this lever and this piece is what pushes the other ancillary parts of the cycle along. So you can decide to invest in this cycle, sure, right? You may want to invest in, I want to invest in the end product. I want to invest in Anthropic. I want to invest in OpenAI and XYZ and all these other companies that are doing awesome things, but we kind of can't at the moment just because of how it's structured. They're not really public companies. But you can invest in Google. Google has Gemini, right? They have an open model that's usable and is investable on the public markets. You also have what else? It's not really that much. So it's kind of hard to, in this case, really at least, invest in the end product. So that left us with what was the story of 2024 or 2025 really with, oh, if we want to get AI exposure, we got to invest in NVIDIA because they're the ones that are making all the GPUs that are needed to build the LLMs and run the LLMs and da, right? That's like a piece of the cycle. But then what about the other bits and pieces that are required for that, right? So the data centers where those GPUs sit, the optical cables where those GPUs have to be connected to actually run and communicate very quickly, the networks, the switches, the architecture to be able to do that, right? The natural resources going into it, the land, the water, the electricity, the power, right? All those things, and you can see where you want to invest within the life cycle, right? So things such as GPUs took the first leg of AI and what's going on, as well as some of the design companies and builder companies like Broadcom, TSMC, ASML, those bigger guys, right? But now the cycle has slightly shifted because we've come across something. We've come across supply constraints in the inputs of what's necessary to end up building the output of AI. Power and actual components, right? We have Micron that just reported earnings just this past week saying that they are fully sold out of NAND demand, fully sold out of DRAM demand. They're really only able to provide support to their larger clients. And they're about sold out till like 2028, 2027, right? So now we're that side of constrained. Then we're also compute restrained because half of the 40% of the data centers that were planned to be built can't be built. They were either canceled or delayed because they can't get materials. They can't get the permitting to buy the land or actually finish the land and build upon that, right? These shortages come up and these create these opportunities for investments and or trades. So to bring it all back into what I'm trying to phone home in is the time period of the investment or the trade, right? So the trade is what's required for a lot of short-term volatile movement. The possibility to see the name jump 20% in a week or even 3% on the day, right? But the investment is more so focused on how does this company potentially grow future cash flows in 5 years, in 10 years, in 15 years? Is this trend, is this demand, is it so insatiable? Is it so continuous that in 15 years, there will still be demand for this product? That's why it's so much harder for certain people to invest as opposed to trading. Because in trading, you get your short-term gratification right then and there. You know if you're right or wrong immediately. Oh yeah, something came out, the news, the reaction, it jumped 5%. Cool, I got in there, got up out of there, took my 40% on the options trade, and done. But are you able to take your time to see that this company has a structural and a leading competitive advantage with a strong enough defensive positioning and posture to be able to fight off other people as an incumbent, or maybe a newer company with different innovations and different lens to think about things, to then be able to continuously provide that growth, that next level? Oh wow, they're going to be something in 10 years. Oh wow, Amazon's going to be great. Are they going to have enough leadership power to be able to actually fight down the line? So if you ask me, I think you need more inference, more information, more conviction to be an investor as opposed to a trader. And if you choose to do both, when you're expressing yourself in the market with your capital or whatever the case may be, you have to know how to flip the lens. Is this a product? Is this a service? Is this a company that I can see still around, still number one, still maybe number two in 15 years? Right? Like, is what they're doing so important to the cycle of capital appreciation, of gross domestic product for that nation, of a shortage in whatever that company provides potentially, right? Or such an insatiable demand that'll be for the longevity that it becomes an easy investment. And that's honestly the reason why so many people, when you think of investments, just generally speaking, not even about the stock market, a lot of people think real estate. And people really harp in and believe in that real estate is actually the best investment, because the demand is essentially infinite. It's probably directly proportional to the population numbers. Everybody needs somewhere to live effectively, right? Like, it's an easy, I could quickly understand that we will always need somewhere to live. As long as there's human beings, we will always need somewhere to live. So at least within my lifetime, the demand will still be there. Is the supply gonna always be there? We don't know, because right now, to my understanding, the supply of land is finite. It's fixed. We only got the land that we have on the earth. That's it. At least until Elon goes to Mars and stuff and do all the other stuff. Like, so to them, real estate becomes a no-brainer, because those two things are in a way always going to be persistent, at least over the next 100 years or so, as it has been over the past centuries, since forever, right? So it becomes much easier for them to understand that, this is a great investment. Yeah, I should buy some land. I should buy that apartment complex, or that duplex, or whatever this parking lot can. I should do it, because those bits and pieces are much more easier to already come to you. But it's much harder for you to understand that, this AI company that does healthcare prescription stuff is actually going to be beneficial for the world in 20 years. Or who's to know that, like, maybe other companies find a way to do the same thing and it doesn't matter anymore, right? Like look at Snapchat. Snapchat was, this is the new Instagram. Meta got something to worry about, until Meta made stories, right? Meta went ahead and made stories, and then because of that, they, I feel like Snapchat lost its footing, and it wasn't as strong as what it could have been, at least. And what is Snapchat now, right? Like, not too much of a name in the social media space, at least, right? Like, not to say that it can't come back, because it very well can, but the odds are lower now than when it was back in 2020 and 2021, or even earlier than that, when I was on Snapchat in high school, 2015, 2016, just snapping friends, trying to keep a streak, right? Like, it didn't grow up with me, at least. With Instagram, I was on Instagram back when it was, right, in high school, and I've been on Instagram since. Still, I was on Snapchat in high school, and I haven't been on there since probably like 2019 or something like that. 2018, maybe. I don't know, but like, I'm just not on it. It's just, it didn't grow up with me. Now, I do see people of the younger generation still liking Snapchat. That's cool. So it seems like it's really a product for them, but that product wasn't able to grow with the initial user base So I think a lot of people around my age and older probably don't use Snapchat anymore. Right? Not to say that that's everybody, right? But a good amount of us just don't. And we're on Twitter or X, whatever, and Instagram. And that's pretty much the two. Same thing with MySpace. At some point, MySpace was the leader, right? So it comes down to your ability to discern what is here for a moment and what is here for the milestone, what is here for the marathon. And that's the hard part. Are you able to keep up with the company, read into their cash flows, understand what the leadership's agenda is, understand how well are they actually deploying their capital? Is this something that you see as a societal growth period, like as in everyday life, right? Are you going out and noticing people on Snapchat? Or are they doing something else? Right? Like those are the points that you have to try to drive home, because yes, you can trade Snapchat, you can trade these other companies that are here for the whim and here and gone, but are they good investments? It's a good question. Are they able to return capital the way that you'd like to be able to see appreciation on your money? Because at the end of it, it's about your ability to appreciate, right? We're not investing in these companies just to invest. At least most people aren't, right? We're investing in these companies so they can return cash back to me, back to the shareholders. So a lot of times these companies have to grow into what they can be. Oh, this name could be for the future. Da, 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 da. Sure, they can. Are they actually going to be? I don't know. You know what I mean? Like you really just don't know until you're able to see and read deeper into it to then say like, well, this is worth it. You know? So yeah. So I think that was the main point that I wanted to try and drive home on, like investing versus trading. And then when you're doing all that, create a plan for it. Like, what are you going to do if that happens? What are you going to do if this happens? Create a insane multiverse of possibilities in the trade, in the investment, in that. Well, if the company is not doing well over these consecutive amount of quarters, and this is happening, and I noticed that this is happening with policy, and it's going to be hard for them to gain any traction, I plan on selling. And then maybe later in 2 more quarters, I'll look back at the company to see if anything in particular has changed and if they've improved for the better. And then maybe I'll get back in at that point and decide if I want to continue that investment. Whereas a trade, it's more cool. I think the markets are going to react a potential way about it. That's good. Let me strategically place myself here. We have to be more tactical, more exacting with our positioning to be able to actually profit from it and gain a benefit from it. You have to be a bit more precise with it, right? Like with investing, in a way, I can, to an extent, right, just buy today, buy again tomorrow, and just let it rock. Right. But then if you look at it from a Warren Buffett point of view, maybe you don't want to be buying the S&P right now where price to earnings ratio is insanely expensive and the companies are really overvalued, right, to what they're bringing. What is the company potentially performing in the revisions? Like, guys, use history to your advantage. Read the books. Understand what happened prior. Like, take your time to really read. This is not a game that you can do casually. The markets is not a casual game. I believe Rockefeller stated somewhere. Yes, John D. Rockefeller. The casual way of conducting affairs do not appeal to me. Right? Like random reminiscence of news and events. You think that these people who are truly bringing in capital over and over again, that they're casually in the markets? No. So you need to really figure out if this is what you're trying to do to push forward. So that's that. The other topic I really wanted to talk about, I think, was a few names I'm interested in. So we could probably dive into that one. Let's try to dive into that one. Got to be creative. Where's my trading view? All right, so I'm going to speed run through this. I added a ton of names to my list. Oh, I gotta put it over here. Hold on. Added a ton of names to my watch list. I just haven't had the time to really move it around. But I think let's talk about it. So Ring Central, just a name that's come across like as a pretty beat down name. It's been down here in the gutter for quite some time and could potentially, see a reversal here where we break out into new highs. I don't know if that's actually the case or not. You know what I mean? I truly don't know. I don't know much about the company as well. But I'm also not investing in it. I'm just looking to potentially see if there's a trade here, right? So things such as financials and revenues more so don't really matter too much to me at the moment, because as you can see, over the past years, right, subscriptions have grown. If I go to earnings have grown, right? They beat their earnings pretty much every time, right? They've gone from $500 million in earnings over 2023 into 644 million, right? I mean, the earnings growth hasn't been too crazy. If you look at other statistics, right, price to earnings, all these bits and pieces, they matter to an extent, but nowhere near as much. Because as you can see, even through all that growth, it's still down here in this 30 to 24 kind of range. Even through all that growth, it didn't quite matter to buyers and sellers, right? You have to discern what matters between buyers and sellers. They want to see growth. That's why companies rotate and investors rotate from one to another and into another and this thing, right? Because they're looking for growth. A lot of times rather. Zoom is a COVID darling that looks to do some similar type of stuff over here as well, where they may be breaking out a little bit, trying to get into a little bit of the high. So this is a name that got picked up in my little scan that I'm kind of liking. I'm not sure if I'm gonna put on a trade on this immediately, but I'll keep it on the watch list and we'll see what comes from it. I'm not sold on it. I'm not married to it. I'm not even like automatically committed to it, right? But it's on the list, and if something pops off, And I could see that it changes sentiment, right? Even further into a more bullish sentiment than where we currently are. Maybe there's a trade there. Roku, right? Look at Roku. It was a name that I wrote up in the, I believe what was the WAP at that point, very early into Integral Volt so far in this example. And I think I've even made a video on Instagram about Roku for real at one point. Like, yeah, mid last year, talking about Roku at $60, $70. They're a pretty interesting marketing platform where I think as content becomes even more and more like involved in our life, Roku can be a part of it from a marketing and advertising kind of platform, similar to how Meta in a way has been a way to get in people's face, and sell your product and sell yourself even. So that's something to keep a watch on. Now, if we get more into what is the hottest of the hot right now, AI in relation to that, names like CoreWeave with NeoClouds, post IPO, boom. Excuse me, we're looking at the weekly time frame here. You see, come up, rejected, tried. I tried to go along here too, boys. It didn't work. Put this right here as some form of a basing period, right? Markets confirmed that, all right, 70 to 75 bucks is enough, right? Like it's been cheap long enough. Let's try and move it up higher. And we could see this ramp right here. We could see 200 by next year this time, or by end of year, or by like tomorrow, like next week, right? With the same status that is it TI? No. Damn it, what's the name? NXPI. Last week I came on here and I talked about that and what they have with earnings, and look what happened. Last Sunday I came on and we spoke for a bit. And I said, well, it's a semiconductor name. It's in a hot space. The sentiment's there. People like these names. They come out, they do great earnings, right? They do great. Not necessarily blow out numbers, but they do great. They beat what they expected. They raised guidance, I believe, as well, meaning that they're expecting to do even better for the next quarter. And look what happened. The name re-rated. It re-rated. How much is this? It re-rated 20% over a week, guys. Like, these sort of things just happen. And this is where, a trade can come into play, because such a large volatile move has occurred over in a short period of time that if you used, some leverage to an extent, or you just went ahead and got some shares. When I say leverage, I mean just like some naked options, some call options, right? With the decent strike and a decent expiry, nothing too aggressive. Or maybe if you wanted to go aggressive, who knows? It's real world. That's the awesome part about the markets too. You can play a completely different game from the next guy, and you guys both can still print in that same vein, right? You got UAMY. Sorry, they've done some pretty cool stuff. A lot of stuff's happening right now in this in the Earth space, right? The Earth frenzy that happened last September kind of pushed a bunch of names up, and then lately we slowly dwindled down. But now we got, I think, some talks coming soon with China and what's going on there, that maybe rare earths become another card that's used going forward. And there's ETFs like REMX that act as a basket of rare earths. And look, even thought that in whole entire period where a lot of these names went zoom and boom, right? You see it, zoom and boom, zoom and then boom, and they gave it all up. The ETF somehow stood afloat. and has gone Zoom and continued to do such, right? With pullbacks in between, of course, 20%, 15%, sure. But it's continued to hold up. Right? So if I'm super interested in rare earths, maybe I want, as an investor for the longer term, maybe I want to invest in REMX as the ETF that has a basket of these goods, as opposed to specifically CRML or specifically HL, right? Or maybe even MP. Because I'm not sure entirely how well this specific asset may do compared to the entire sector of rare earths, just knowing broadly that, hey, these rare earths are important. They said they are. They're going to be needed for all these other pieces, uranium, really needed for energy. We know that we're going to need that for this, right? And then as more things become more synergistic around one another, it creates even more bullish thing, right? Like these rare earths and energy stocks are important, and nuclear is important because right now we're kind of maxing out the energy grid and we need to add some more. But then they're also important because that energy will be used as well. That extra, surplus of energy will be used for AI, and we're power constrained. Why do you think Bloomberg? Why do you think Bloom Energy looks like this? Why? Why do you think the name is a $290 stock and is up 220% year to date? And is on my investment book for the sector. In section 3, energy and infrastructure, I put Bloom Energy in one of my investments for the year. You know what I mean? That was a part of it. That was a part of it. And Caterpillar, right? I'm not sharing my entire list of the integral holdings, but it's a part of it. And I have this research here so that when dips like that happen, what you saw, I come back to it and research it. And I say, well, why was I bullish on the name? Bloomberg Energy, or Bloom Energy. I keep on saying Bloomberg. Damn. Bloom Energy has emerged as a critical solution for the AI infrastructure as the most pressing bottleneck, power availability. In the January 2026 Wyoming project approval catalyzes the thesis that 1.8 gigawatts of AI factories, including 900 megawatts of Bloom fuel cells, representing approximately $3 billion in revenue. And then that follows also a $5 billion Brookfield partnership and another $2.65 billion deal with AEP, increasing gigawatt capacity from 1 to 2 gigawatts by the end of this year, targeting at $8 billion in long-term revenue. Right? I see that. I'm seeing, well, they're going to do they got a big hyperscaler relationship with Oracle as well to provide those AI power components. And then I go about my life and I see things and I just notice. I'm in a walk here in Brooklyn. I'm walking past the hospital and I see these big gray, like charging looking things, some like, you know what I mean? Some cool shit. And I'm like, what's that? And then I see Bloom Energy on it. So I'm like, oh, snap. And so you're telling me that this energy company is not only providing stuff for the AI guys, it's also providing energy for real reason. Like, we're talking about people's lives are based on this. Like, this is a backup system for a hospital as well. So it's not just the AI story. It's a life story. It's a power story, period. Because I can't think of any hospital that doesn't need this. You mean people in the ICU? How many babies in the NICU that need power? God forbid some type of grid goes down, like anything. This becomes a necessity now, more so than anything. This technology. And if they're the leading ones in producing that, I know for a damn sure everybody on that board at every hospital is going to say, yeah, we want that company. Right? We want that. So it's not just the AI guys asking for the fuel cells. It's also hospitals. It's also, large infrastructure. Think things that are needed to be run on power in the long term. Think backup systems. All of it. Right? So you think about that, and you also think of GNRC, companies like such, Generac, right? More on the home power generation point of view. They haven't quite taken off as much as Bloom has, but in a way, I see them as a great proxy to be long power, be long independence in your ability to have, power for yourself, for your home, right? Especially as more and more natural events come on, right? Think of hurricanes, flooding, and all the other pieces, right? Global warming is a real thing that's leading to these larger events, such as fires in the Palisades, or a drought there in other cases, right? And so much hurricanes and flooding and all the pieces that we're going to experience even more and more as the sea level rises and our what is considered the ground level somehow evaporates, right? Like, these companies are important. People are going to be building up their moat, building up their defensive, the defensive posture to be able to, keep their family warm, keep their family comfortable. As like backup power generators. Think of what's like. The world of finance tries so hard to use these crazy, awesome words that sound cool, and they're like EBITDA and like price to earnings ratios and like return on cash and cash flow equities and discounted cash flows for comparables and all. Sure, I get it. They all have immense value to be able to compare assets to another and split hairs and do all of that. It's really cool to see that. But sometimes all you need is intuition to be a good investor. And awareness. Intuition and awareness of, wow, okay, I see that as a problem. I see this as a problem. What could be a potential solution? Which company is building towards that solution? Right? Are they doing it in an effective and efficient manner? Is the leadership team skewed on what's occurring? Is the demand for their product so insatiable and durable as well? Right? Think of Pop Mart. Think of Labubus. That was the biggest thing. The biggest thing for like 4 months. Right? So sure, if you had access to Hong Kong markets, you could trade Pop Mart. But does that make a Labubu as powerful or as brand powerful as like Mickey Mouse? As like Sonic? Right? Does it? Like, maybe. As like Miffy? Right? Does the Labubu character somehow find its way to be that pervasive, to be Snoopy? Is that like you see what I'm trying to get at? It could be, but what did Pop Mart do to make it become that? Did they release short films to, bring in everybody to be, like something interesting? Did it create something beyond just a little figure to throw on your bag? Not really. So to me, that just seemed like a wave. Wave, you go to the beach, you walk on the beach, waves come in and they recede, and they recede very quickly. They recede. Boom. Okay, cool. Yeah, next one. That's what trades are for. Trades are for ebbs and flows, waves. Investments are for tsunamis. We're looking for companies that are going to compound over and over and over, year over year over year. The demand doesn't go anywhere. The supply somehow, is able to be provided, but maybe have some sort of constraints at times. The demand grows even at certain points and seasons of the cyclicality of the business. Where does the business fit in the world of what we demand as individuals and what we are growing to demand as individuals, right? You think of what Amazon is doing and their ability to do what is now 2-day prime shipping. In some cases, same day. In some cases, 2 hours. You know what that does to the human psyche? Why the heck should I buy anything from anywhere else when I could just get it in 2 hours from Amazon? And you know what? I'm willing to pay another $4 for it too, just because I'm gonna get it in 2 hours. I want it now. Right? That was the same, mindset for why Best Buy was so awesome. Because okay, cool, I could go there, I could check it out, I can test it out, I can have it, I can walk home, and boom, I got it. But now you just have to second guess yourself and say, well, if I can get it in 2 hours, if I get it tomorrow, all right. Then I don't got to get in my car to go drive over to the Best Buy. I don't got to do this, right? It taps into the psyche of the individuals, of what they want. Remember, humans are lazy. I want it now. Like all the people that DM me and like, oh, Nedrick, how do I run up 100 bands in a month? And I'm like, bro, what? No disrespect, big dog, but have you even tried to buy anything in the markets? Like the fact that you think that you could just step into the game and do it just off the whim. Hey, bro, power to you for thinking through the impossible. I love that. I love that energy of you think it's possible, you attack after it, right? Achieving the impossible, but it's not a game to come in with a faint heart of believing that you can just pull up and do and is and exist and be. It's a craft to it. It's a mindset. It's a view on the world, a scope on the world that you have to cultivate. You have to build upon. You have to create what is scenario on scenario on scenario and infinite possibilities in the multiverse of what could occur, all while observing real life in the day-to-day, asking people questions. Well, why do you think that? Why does that do this? Do you feel comfortable when it does that? Is that something you would do again? Right? Those are all the questions that I ask the everyday people in my life, the random people that I don't have any relation to, and I just maybe see out in the street. You just have to gather information. You have to gather. You're playing the most incomplete game and trying to play those rules by that. So yeah, when you look at Micron, you say, well, dang, that thing's insane. It went from 60 to 500. Oh my gosh, right? But where were you back in August 15th when I posted a reel talking about how Micron was undervalued down here at $120 a share? because I saw the price of DRAM, the price and the need of DRAM and NAND for AI, and that they were already basically fighting supply restraints, right? And then they were already, building out fab shops to build out more supply here in the U.S., right? This buying here and buying here are the difference of awareness. That's all. That's all. And I'm not saying you can't make money buying here at 542, because to be honest with you, I'm gonna keep it a bean. I see Micron going to 700 plus. So sure, you can make money going up, right? There's still at supply constraints. You could grab another 30% by all means, of course. But your risk profile by buying up here and aiming for a 700, 725, whatever, 750, even whatever, is dramatically different than somebody's risk profile who is buying in the 120 range, in the 115 range, and has that same target of that 750. The name could have gone to 20 bucks, damn it. And my risk reward ratio is 6.7 compared to somebody else's of what is 0.43. That's the difference in being aware of what can happen, what's going on, how things are moving, and being early. Sure, it's easy to say, oh, I was early, right? For sure. But are you building the tools and the mental model to capture and notice these things early enough? So with that being said, we got tons of people saying like, hey, like the compute is still restrained. Tons of names that are going through pain and issuing tons and tons of restraint in this power space, in the actual data center build out space, in all of it. So much so that I'm even more bullish on power, and I'm even more bullish on industrials, more bullish on utilities, more bullish on the inputs that are necessary for AI. So that got me looking into names like Carrier Global, where they do industrial machinery, right? And I'm looking like this. Well, shoot, let's build a trade real quick. I'm about to do the same thing I did with NXPI. We did this last week. Last week, we did the same thing. I'm going to do the same exact chart right here. Same thing. And I'm pretty sure I've explained this similarly too before. You touch your hand on the stove, you burn yourself. Okay, you realize that thing is hot. Okay. Next time you go to touch the stove, you check and say, well, is it off? Is it on? Okay, it's off. I can touch the stove. Let's go ahead. Nice. Nice. Touch the stove. Yeah. And you build a psyche, understanding. Oh, you walk past the stove. Oh, that felt a little hot. Okay, it is hot. I'm not going to touch it. And you know that, well, now that I know now I know what conditions occur when the stove is hot. There's usually a light on the stove that says, the red light, it's on. I can feel the temperature roughly while being close by the stove, right? As I move my hand closer to the stove, the temperature of my hand will increase and I will feel the warmth as I move closer to it, right? So you know what happens when the stove's on. You know when to touch it, when not to touch it. Same thing happens in this market. You know when to look at a name and say, that's nasty. I don't want to do anything to do with that, because if I touch it, I'm going to get burned. And you know when shit, the name looks good to me. You know what I mean? Let's get to it. Okay, cool. Okay, boom. They signed a deal with somebody. They're gonna do this with this. The Citibank comes out and they maintain the buy, raise the share price to 78. Okay, cool. We're sitting where? We're sitting at 67. Shoosh. 79, 70 something. That's a whole 15% increase. Maybe there's a trade there. Oh, RBC also upgraded them to 81 a share? Why they did all that? And then also Carrier Barclays did the same 79 from 60. What are they seeing? Oh, I know that when companies upgrade stocks, a lot of times it's because they have deep empirical research and quantitative research that proves that the company will potentially increase in value, or the perception of the said value will be there. Right? So 67 is right now where that point is. Maybe I need to figure out, from that point, look at the open interest, see where things are moving, see what makes sense, what levels are truly pressure, and try to grab some. Right? Maybe I need to get in a little bit earlier. Let's try to build an entry around 69. That way, I could create a little bit of a cushion by managing my risk if we get down into what may be 67. Right? Build myself a little 2-point cushion, or maybe even a 3-point cushion would be necessary for my managed risk. Then I could come through, check here, check the open interest, check the levels that we've seen prior. Okay, cool, like 75. All right. The stock like 75. Boom. The Psyche says 75. Let's run it. Next. Cool. It likes 80. Psyche says 80. Let's run it. Boom. Right? Then maybe a target, a little bit overshoot of the highs that we've seen before. Boom. Let's do it. Let's do it. Maybe we get some resistance up here. It seems to be a continual point where when price reaches this range, it tends to do a little bubbling and maybe do a little dance right here. Cool, do a little dance, and boom, we step out into 85. I love this setup. Looks beautiful to me. And then on top of that, we have a double bottom kicker right here. I like that setup. The magnet's on. Sorry. Double bottom kicker right here. 1, 2. Boom. And what that tells me is society said we need to go lower. You need to go lower. Nope, never mind. We're not going lower. Okay. Fine. Well, society says we should go back lower. We should go back lower. All right, but we're done going lower now. This is enough. And then now we found a way back up. Oh, so wait. So society said we're going to go lower here. It pushed us in the 53, 50s range. Then when we changed our mind, we went back up. Society said push it back lower. Okay. But then we didn't go lower. We didn't go as low or lower than what we did last time. That means that society is saying, back when it was worth $50 in December of last year, we appreciated, came back in. And now in March of this year, society said, well, it's not quite worth what it was worth last year. I would say it's more so worth 55, $5 higher or so. Society is telling you it's more valuable, and it's done being less valuable. Let's take it higher. Let's push into 80s. Done. I'm gonna set my alert. The plan's already built. Now the next step is, can you actually withstand the plan? Can you follow the plan? Can you actually do the plan? Can you execute it? That's the next question. That's up to you, though. Right? Car is a name that I really like in this case because of this. Similarly with Twilio, if you've been a part of the trade of the Integral Vault for quite some time, you will know I was a buyer of Twilio at 55 in my long-term account. Something about it just said, we're going to need this beyond what we're doing with it right now, back in June of 2024 or something like that, right? I wrote it up. In my agent report. Just to show you guys, right? Like, Just want to show you guys at least. Let me see if I could find it. In Mission 45 in 2024, I detailed my Twilio long term. I trimmed some of the position lightly, and that was the trade. Continual, right? Low, higher low, higher low, higher low, continuing to create what is the breakout. I targeted the 75 as a potential zone because what we saw prior over here and over here. We continue to push such, right? Even names like GSAT, Global Satellite. What have we seen in the satellite space? Right? I said this deal, Globalstar potentially looks to see, what could be a beta trade for people who are looking to get exposure to the space industry, similar to what SpaceX is doing. And now look at SpaceX, about to IPO at $3 trillion. Look at Globalstar, GSAT, which I believe they reverse merged. So 139 was at that point, right? But if we were to go look at it now as to what GSAT did, so that 139 reverse merger was like 20 something point. You could see this. Same chart, guys. 20 something bucks a share. Like we 4x'd 20, 40, or 25, 50, or more so like 2x, sorry. From here. And all that took is time and patience, right? So yes, you can trade this or you can invest this, right? And you don't have to be right on the time. You just have to be right on the direction through time, which is why I swing trade more so than I day trade. I don't want to have to figure out timing as much because you can't time the market. You literally can't. And to me, trying to do that over a short time period, it'll work. It definitely can work. I've seen it work for so many people as well. But work for me, my mindset, my risk tolerance, my point of view, my psyche doesn't quite work for me. I don't know why, but that's just who I am. And that's just the game that I understand. That's the game I play. I play the game that works for me. And there's other people that I know that day trade. And when I sit down and explain these concepts or talk about these concepts, they're like, what the hell are you talking about, bro? Like, there's no way you're trying to tell me that told you that this told you this. And I'm like, well, okay, fine. And you're telling me that all you saw was candlestick go up and that was enough information to make you say put 5K on it? As someone looking for and as a truth seeker, you can be right in that case. And this is such a hard conversation to have too. Because it's not that I don't believe them or not that I don't think that they're right as well, because they are. They're clearly doing it right. It's just that my mind doesn't allow me to kind of replicate it in a way. I don't know. But I hope what I've been able to share with you all today does allow you to do something similar to how I've positioned myself in markets and potentially benefited from and read hundreds and thousands of pages of Goldman Sachs research and other firm research, or even dive directly into the company's websites to try and learn what the heck is this, what the heck is that. Like right now, I'm trying to learn what the heck CPO components are. because apparently it's a big thing in AI. And I have no idea what the heck this is, bro. Co-packaged optics. Like I've just kept on seeing it. And I'm like, what the hell is this? I don't understand it. I don't know what it actually is. I just to this exact moment, I still don't know what it is. But I know that I've seen it. I know that it's been in relation to AI several times now in like certain things that I'm reading into, and I'm like, oh, the CPO and this, that, and the other. And dang it, I'm trying to move this out the way, but it won't move. Okay, let me do this. And to me, shoot, this seem important. This stuff seems important. Let me try and find some research for you guys. Boom, let's do that. Right, so this was the last thing on the agenda that I kind of wanted to talk about, which was I wanted to talk a little bit more about data. What am I seeing in the data? What, like, this is where, you know, I tend to find an understanding of what's happening in the market. So we've got I guess I'll talk about some pieces that I've seen. Did I talk about this last week or no? No. Massive earnings revisions. Energy. Massive revision. Like, bruh. They drew so much earnings forward with this whole Vermoose issue. At least as of right now, I guess it's starting to trend generally better, right? The IPO market seems to be a factor that's coming in. That also plays into the cycle. We're estimating 160 billion in IPO. All this new capital coming in. Hey, you know, maybe that could smoothen out the market a little bit. Help it out with the with how narrow the market is. But maybe it's not enough. You know? We got hyperscalers. They raised the spending despite stocks lagging. And according to Goldman Sachs research department, they said, hey, if we look at their performance on this axis and their spending in billions, you can see who's really spending. Right? Oh, sorry. No, this is, what is this axis doing? This is time, obviously. This is appreciation or depreciation in asset value. And then I believe this is, yes, this is the CapEx. So yeah, that was right. This axis is the amount of CapEx. So it seems like together as a whole, they're pushing CapEx even higher, right? So the buyers of Bloom Energy, of CPO components, of optics components, of what is necessary to build AI, it tells us right here they're buying more. They're going to buy more. And they're supply constrained. Supply demand, no supply, insane demand opens the jaws of a crazy divergence that creates these massive re-ratings in price. And everybody's texting me about, oh, what do we think about this stock? What do you think about this psychedelic stock? What do you think about that? I'm like, the obvious bet is right here in front of our face. Why are you spending all this time dancing around trying to find some other stock that's $4 when the big winner is right here? What are you going to do? Look back 5, 10, 15 years, 30 years from now and have your kids look at you and say, well, wait, what'd you invest in, Dad, when you were in your 20s? Oh, I bought some psychedelic company that did this thing. And like, Just buy what makes like I don't know. Maybe I'm being an asshole. I don't know. Whatever. I move on. Like it's just so interesting to me when people are like trying to get cute with it. Like, oh, I should buy this and then I trade that and then I move this and then I do that. It's like the obvious trade is right in front of your face and it's said 20 billion times. It's said so often that now my damn phone, every time I try to type in I when I'm texting somebody, it auto corrects to AI. And I'm like, who the hell are you to try and change my whole thing right now, bro? So, yeah. With that being said, let's talk a little bit more about this. Materials, energy, information technology, Dow, materials, chemicals, information technology. FactSet from Goldman Sachs Research says that the S&P 500 with the largest consensus revisions to EPS for the remainder of 2026 since the start of Q1 are these names. Next. Like, not to say the obvious here, but a lot of these names are in relation to AI. And then energy. Because the other major theme, the other major issue, Strait of Hormuz, still pending, still blocking up. People on the West Coast talking about $6 a gallon. Like, I don't know, guys. It's just there. Then we look at, other names. Here's the other piece I want to talk about. This is another fact set from Goldman Sachs saying CPO development. I'm like, bro, I still don't know what the hell is CPO, right? So I guess CPO is a part of optics, right? And it's saying that the I guess the supply chain for NVIDIA is that early 2026 commercially available of the CPO switch. So maybe it's a networking thing. Okay. And then it says of, the compute stack, the GPU, NVIDIA, Blackwell, Rubin, got it. The network on NVIDIA, makes sense. That's the switch system, NVIDIA Spectrum X, Quantum X. And then the optics are CPO platform name, we have no idea. Chip fabrication comes from TSMC. Okay, cool. CPO chip test is SPIL. I have no idea what that is, but let me go Google it to try and figure out what the hell it is. 3711. I have no idea what the heck this is or what this Google thing even gonna do. Okay. Oh, snap. Okay, so apparently, according to this Google search that I just put through, everybody has access to this damn Google shit. SPIL is Siliconware Precision Industries and is the world's largest provider of independent semiconductor manufacturing services and assembly, testing, and materials. Following the 2016 merger. Okay, yeah, cool. Boom, boom, boom. And they're on the New York Stock Exchange listed as ASX. ASX is the chip fabrication test. And then if you look at the Broadcom side of things, CPO, TSMC. So TSMC seems to be the main winner here because they're doing both CPO chip fabrications for Broadcom and NVIDIA. So you got two of the big dogs in the AI space all getting put throughput into TSMC. Are you long TSMC? Right? Like, okay. Yeah. Nextronics, Senko is a private company, I guess. Shuffle boxes that are going to be, okay. Corning, GLW for fiber. I thought they just did glass, but apparently they do fiber too. That's cool. Fabrinet, system level assembly, right? Like this right here in laser sources. These are some like overseas Taiwan market stuff. Maybe there's a light, okay, and coherent. Yep, I know those companies. I've seen those go parabolic before. Yeah. Data is important. So join the Integral Vote where you have access to data like this. This is not everyday data that Joe Schmo has. The agent does, though. So, yeah. Light rays bounce across small glass chambers inside this. Oh, okay, sick. That makes sense. Corning, GOW. Long it, go to bed. Next. And then look for holes in the investment. Look for what can disrupt that company, what can disrupt your ability to compound. That's why they call it fiber optic cables. That's cool. And then guess what? Here's another thing that I also know about. I remember hearing Trump talking about he wants Apple to use Corning for their glass because it's US based. Oh, wait. So I would think based on how Trump thinks, I would think that he wants Corning to do all the US domestic AI stuff as well, because he doesn't want external companies being components, because his main thing that he's harped on for so long, the reason why he's going back and forth with China, the reason why he's put tariffs out is because he does not want the US to be dependent on other countries for their inputs. What he saw during COVID, I guess, scared him or spooked the heck out of him, and he doesn't like that. Next. Right? I don't know. But that's kind of the points that I wanted to talk over today. You got buybacks. If you haven't gotten the time to take a look at my Substack, I released a Substack last week that went over what I consider to be invisible yield. I mentioned it also in the last stream, where I talked a little bit further on how buybacks are effectively invisible yield and is free money, where you're able to see that if the company you're invested in is continuously buying back the stock, it's reducing the denominator in outstanding shares and effectively putting more cash in your pocket, because you went from owning 0.0000000000002% of the company to effectively owning 0.0000000000008% of the company. More than before. More money, more equity ownership, more assets, more life. Agent out. Peace. What about buybacks that don't seem to be helping the share price at all, even though you're being undiluted? I mean, that is the buyback story is more of a nice to have. It's like a little push, like a little boop, like it's a tailwind kind of event. That's a light tailwind. It's not the only reason to invest in a stock. It's just a backbone. In terms of investing, where buybacks aren't really helping the stock or even the stock, that's a story of the stock itself just not creating enough growth. The company itself is not creating enough growth, and they're just buying back to buy back. Whether they have another plan of some sort, maybe that could be another case. I don't know for sure what that actually is, but the way I view buybacks are more so of a awesome nice to have, as opposed to a single point or reason why you should own an equity. You shouldn't own an equity just because it's a buyback as well. But I think even though you're getting undiluted, you have to try to figure out is is what you're getting being undiluted worth the buyback, right? Is the company growing? That's the end of it all, right? And a company like PayPal is in this weird spot along with several other companies where they've gotten big enough to be a mover or shaker or a household name, or right, they've gotten big enough to do that, but where's the growth? Right? I don't see anybody jumping to use PayPal on a consistent and we also have so many other technologies that are disrupting that space, right? Earlier we talked a bit about crypto and how it's created this blockchain scenario, and now we have stable coins, and the movement of money is going to be so frictionless than it was prior. So the solution that PayPal was solving for is already kind of dead. Look at Zelle, right? Zelle also has come into the marketplace, I think 2017, 2018. And that was a defensive moat for the banks to be able to keep the money within the walls of the banks. They all came together. That's why it doesn't cost you anything to use Zelle, right? The JP Morgan, Citi, PNC, all the major banks, they all came together to create this thing in partnership with an external technology company that allows you to simultaneously and very easily send money from one account to another in their network. Why? Because they don't want people to have Venmo balances anymore or have an external Cash App account that is a quasi bank. Fintech stepped in a way that scared the banks, so much so that they had to create this product, right? And then on top of that, now why do you think they're going back and forth at Congress with Brian Armstrong and Coinbase and what they're doing with Circle and USDT and USDC and then talking about, no, they can't offer yield. That's not fair. Because the banks are going to lose their moat. They're losing their moat. They give you 0.02% in your savings account if you're lucky, and then they go out and they lend it to you and they give you a credit card for 22% interest, or a car note at 12% interest, or a mortgage at 7% interest, right? And they just win. And the consumer never wins. So the question, I think, for a company like PayPal is more so, well, they're having other issues that are why their stock price ain't moving. Same thing with Square or XYZ or Block or whatever they want to call that damn company nowadays. But where's the growth? How are y'all gonna navigate a space that's being so disrupted by so many other players? How fortified are your future cash flows if blockchain just becomes a thing of the now, and I no longer need to Zelle somebody and I just USDC somebody, the same way I Apple Pay tap to pay for my coconut water at the corner store, right? What happens then when the future comes in and disrupts you as an incumbent? What do you think? Agentic AI and platform payments are going to save you? Maybe, okay. But if anything, I think it'd be even faster to do that on USDC than, you get what I mean? So a company like PayPal has bigger issues as opposed to their buybacks, right? Maybe they need to be spending that money on figuring out how to compete with the blockchain instead of buying back the damn stock. That's the problem. Then it starts to become, well, is this the right management team for PayPal? Is this the right management team for these companies to be able to grow into what is now the future? Maybe. And then who's to know? Maybe they're working on all this in the background right now. And next month I'm going to sit here and I'm going to eat my words because they were building all these other things that were going to be able to be a part of it. But as of right now, and what we're seeing in society, sure, I'll PayPal somebody something. I'll use it every now and again. But is that my main medium of changing money? No, I'm going to Zelle somebody. No, I'm going to just send a wire like a normal human being. I'm gonna go get some cash. I'm gonna maybe send them a few USDC if they're on the crypto wave. It's just like what was PayPal's wow ease of use, just quite the luster isn't there anymore. So yeah, I said it was gonna be a short stream. It's a bit longer now, but it is what it is. We talked about the points that I wanted to talk about, so I'm happy to have at least done such. I'll catch you guys in the next one. Aging out.